Hello everyone, it's Tim Davis coming to you guys from the Bullish Bears team, and this is my weekly market review and long-term trade ideas update on my portfolio. So I'll get started here in 1 second. All right, to all my longer-term traders out there who follow me in the swing trade room, updating my portfolio, doing some market review, and let you guys know what I speculate and what I see, and the trades that I'm in, and review some of the charts. Okay. All right, now as far as the market goes, the longer term aspect, looking at the daily chart of the S&P first, and what I have noticed is that this $2,800 level has been a level of resistance. And if you take a look, I say back since 2018, the beginning of 2018, you'll see certain areas where we have reached this level and got rejected before we actually made it through it. And I'm gonna try to highlight those so you can see those, so you can get a picture of what's happening now. So this $2,800 level, as you can see, I draw a trend line there. So there was a retest there back in around about March of 2018. After we broke it here, tested it, and it got rejected. Came up again for another test here. It was back also in 2018. That was around June of 2018. Tested it, failed before finally breaking above that level. Right around there. Okay, and then we marched to new highs, 2940, and then we broke completely through that $2,800 level and failed. Then we started a couple tests again, tested it here, failed, another test here, failed in a big way, and that was back in and that was started around about November 2018. And we traded down to the 200-day moving average. Now we're back up here to this 2,800 area again. So that's what we'll be watching over the next week or so to see if we could continue to march higher and just punch right through that $2,800 level in a big way. That's what you need to see. This thing jump up to around about 2,900, 2,940 to take out that old high. But it's going to have some challenges in order to before that actually happens. And I'm going to show you guys what the market speculation is. Anytime you look at the options market can tell you a big story as to what the overall sentiment is as far as traders. So I constantly watch the options market activity to see what the current sentiment is, overall sentiment it is. So we'll take a look at the SPY real quick, which is the S&P ETF. And I love using barchart.com because barchart.com it's a very good tool and helps you to see a lot of speculated action. So this is the, let me put up the SPY. It's the SPY ETF. And I look at the March contracts. I look at March and April to show you guys what the put call ratio is. So this is the, let's look at March first, March 15th. Let's look at the monthlies. So look at the March 15th of the S&P. If we come all the way down to the bottom of this options chain, you'll see. Okay, right here at the bottom, left hand side where it says put volume total, call volume total, then it has a put call ratio. Anytime you have a put call ratio that's above 0.7, normally that's considered to be a lot of bearish activity going on, a lot of bearish sentiment. Anything above 0.7. Anything below 0.7, normally mean there's more bullish bias activity going on. So right now, within the S&P or the SPY, you got a lot of action that's leaning towards a bearish move. Even though you've seen all that move going on this week, it's like a lot of people or traders or market movers are leaning towards a bearish move coming up in the near future. So that's what the options market is telling us for the SPY. Now let's take a look at gold while we're here. I traded gold for a while, got out of my positions right before the pullback, and that was just one of the reasons, because it's been trading high for so long, and I was actually trading gold since around November last year and made a pretty decent profit. So as you can see, this is gold from starting around October of last year, and they had a nice move all the way up until we got back up to this level right here, right around one. Sorry, let me pull up the actual gold chart itself. That was the gold ETF, but so right around October, started marching up October of last year, and I drew these trend lines earlier last couple weeks ago to mark key areas where gold could probably see some type of resistance, and voila, it ran into a resistance wall just like it did before. So when you spot areas where trend has been before, you want to mark those just to be an area for you to look out for as possible trend changes. So gold is back up to this level, got rejected here. So we'll see how that plays out over the coming days and weeks. My guess is that we'll probably start to see gold drift lower over the coming weeks or over the coming months or so. And who knows how far it will drift lower. But this bottom trend line that I drew, this is a longer term trend line dating back to I want to say back 2008. But as you can see, each time gold has drifted back towards this trend line, it has gotten a bounce. So it hasn't created a lower low. We got this 1124 low back in 2017. Sorry, back in 2016. Then we rebounded. Then we got this low here back in October of 2018, but we did not create a lower low. So that's still bullish on a long-term basis. So if we get a pullback here, I'll be watching this action in here to see where it settles at. If we find a way to settle back at one of these moving averages lines, then I'll be looking for a move back into gold over the coming weeks and months. But I'll be watching this trade now for a while, watching this action here for a while to see what the see where it settles at before I decide to take any more gold positions. Okay, so that is my look on gold and my look on the overall markets. I use S&P because that's the one that most people actually look at to see how the market's doing, how the market's trading. Now let's get into some of my positions. Okay. Hello, good evening. All right, it's watching me record this live. Okay. All right, here's some of my positions that I'm still in. And one I'm gonna really show you guys today is you guys know I'm still bullish on this marijuana sector in general. So my first one that I'm going to review again today, as I review it every week, CNTTF I'm bullish. It's a marijuana stock that I've been trading since last year, early in the middle of last year. When I first bought into this, it was at 857. It dropped tremendously since then. And I just started adding to this position this year, and finally got back above my entry price in TTF. So that kind of excited me this week. You are too. Yep, I'm very bullish on marijuana. So just as I expected, I knew eventually that CNTTF would get back above my entry price, my original entry price, and sure enough, I entered it at 857 early in the middle of last year. Now it is trading at $9.60 a share. So what I'll be doing over the next coming couple weeks, I'm gonna start adding to this position to build it up a little bit more. My ultimate goal, as you guys can see, for this one over the next couple of years or so, maybe before that, is to see it get back above this 1197 high that it reached in 2018. I think we can actually punch it through that eventually and head up towards 1505 over the coming 2 years or so. So I'll start adding more to that position over the next week. So CNTTF is looking bright, and I am up pretty good right now. Okay, CVE. CVE is another bullish position that I put on. This one was a 8/10 call debit spread that I put on, which means it's a debit call spread. I bought the 8s, sold the 10s, and it has an expiration date of June 21st, 2019. It has a break-even point of $8.80. Entered the trade on 2/15/2019. First target goal on this one is $9. I'm gonna go through each one of these individually this time versus how I've been doing it, and I want to break down the charts and just show you guys a snippet of what the charts look like. So CVE, let's take a look at that chart, and then I'm gonna also show you the breakdown as far as put call ratio. Show you guys what I like to look at to determine, you know, if I'm really ready to stay in this position or not. So this is CVE, and let's take a look at this again here. CVE. So into this, I entered this one on February the 15th. My first target goal for this one is $9. So we're getting close to that target goal. We're at $8.89 now. So my speculation is that CVE is still showing a lot of bullish activity. And so I want to see a good push above this $9 level over the coming weeks or so. And if you look at the longer term weekly chart, CVE, looks like it's been trying to form a base. It's been attempting to form a base. So I'm expecting this base to be fulfilled and for this thing to really jump higher. So that's the base that it's been performing. It's been bouncing off of this. This is like a trend, bottom trend that's been bouncing off of. Every time it's pulled back, it's pulled up to the 100-day bounce, drop back to the trend line, up again, and now it's like this trend line is getting smaller and smaller and smaller, signaling some type of breakout in the making. Some type of breakout in the making. There you go. So I'm expecting, and as you can see, TCM squeeze is getting more and more positive to the upside. As you can see, it's got red to yellow, and then next you'll see yellow to blue, hopefully. And hopefully I'm looking for a break out of this squeeze that we're currently in, and for this thing to march higher. If it does, more than likely I'll take profits, and I will probably roll out the spread for a higher price. In other words, I'll probably trade the spread that I got now in for it. Now I have 8.10. If we reach $10 over the coming weeks or months, I'll trade that one in and push it out a little further. So that's how CVE looks right now, and let me show you what the options market is saying about CVE. So let's go here. It's my barchart.com account. This is a very good tool to use when you're trying to see what the options market is saying. I listen to the options market because the option market is normally telling you, giving you some type of story as far as how overall our outlook looks. All right, this is the March expiration of CVE. And like I say, anytime you see this put call ratio, this is what you want to key in on. It's put call ratio. Anything that's 0.7 and below is a bullish bias. Anything 0.7 or high is normally a bearish bias. And as you can see, this thing has a huge bullish bias still. And to get more confirmation, look at another month. Look at the next month. Let's look at April and see what the options market is saying for April. Even more bullish, 0.05 is the put call ratio. So this thing, I'm really expecting this thing to really pan out in time. And as you can see, I'm almost at the $9 level already. So I am still confident in this position. So I'll be holding it for much longer. Next position, ECA. Okay, look at ECA. And let's go back to that so I can show you guys what it is. I'm moving a little bit too fast. So ECA, bullish on this one. Into this, this is a 7/8 call debit spread expiring April 18th, 2019. My break-even point on this one is $7.35. Enter this trade on February the 20th, 2019. First target goal on this one is $8, ECE. So energy stock. All right, so let's break down the chart. First target goal is $8. ECA. Sorry. Okay, so right now price is at $6.89. So I got a ways to go before I even get to my target goal, but I think time is on my side. It also has earnings coming up, so hopefully that earnings give us it has a it's a bullish bias on earnings. Hopefully, if not, I still got a couple more months left before this expire. And as you can see, it's still trading below the major moving averages, but I think the momentum is about to swing to the upside. And I'm going to show you what the options market is saying, which is why I really feel strong about this position. And if you look here on the weekly chart, you'll see how it's pretty much trying to form a base here. Around about the when it made this huge drop October last year all the way to the beginning of 2019. It's like we made a base here. And this is when I pretty much got in, right when I seen this base starting to form. Now, the options market is telling us this. Let's take a look at it. The ECA. I look at March and April again, because I look at the next 2 months, see what they're telling us. This is April. April, there's a big bullish bias towards this one as well, 0.17. As far as put call ratio. Let's look at March. March, 0.26, also bullish bias. So hopefully this bullish bias, it stands firm and it plays out the way I believe it will. So we'll see how that pans out. Next one, we'll take a look at CBS. CBS. This is a longer term trade. I think this is going to take a lot longer to play out. So I may be in this one for several months. Into this one, into the 50/60 call debit spread expiring in June, which means I bought the 50, sold the 60s. This doesn't expire to June 21st, 2019. Current break-even price is $52.96. Enter this trade on 2/19/2019. First target goal is $55. And this one, actually, I looked at it today. I'm in the green big time already. I'm probably up about almost close to $100, but it still has a lot more time to play out. So I'll stay in this particular trade to see how it pans out, and let's see what the charts look like. CBS. This one is still trading below the major moving averages on the daily. And that's why I gave myself a lot of time on this one, because this one could move in tandem with the market if this thing has some type of pullback. We'll see what happens. And we are right above the major movement average, just below the 200-day. Once I punch through that 200-day, this thing should be off to the races. That's what the daily chart looks like. And on the weekly, so we're still below these major moving averages. We're just below the 50 EMA on the weekly. So I'm looking for a punch through this over the next coming months or so. And the TTM squeeze on the weekly is starting to turn. Momentum is starting to turn from a negative bias to a bullish bias. All right, let's take a look at the options market. Let's see what the options market is telling us. CBS. All right, CBS. Okay. Yes, that is correct. Anything below 0.7 is a bullish bias. Yes, anything over is yep, you got it right. You got it right. And if you want more clarification, I'm gonna show you guys where you can find that. For more clarification on that, if you look at Investopedia, is a very, very great tool. Look at put call ratio. Investopedia will spell it out for you and show you everything you need to know as far as that put call ratio, and that's exactly what the you're welcome. Exactly what the pros say. So, all right, getting back to CBS. Okay, so let's start with March. Here we go. If we look at March, this is a little bit higher, 0.56. So that's how I'm getting close to that 0.7. That's why I spreaded this out. So 0.56 is still a bullish bias in the near term. Let's look at, and I'm gonna look at the month that I'm in as well, that I'm actually trading. Look at April. We'll go all the way out. Take a look at a couple months. April, still bullish bias, 0.58. Let's take a look at June. This is the month that I'm in, June. .38. So with this one, if I can just get to that mid 50 level, 55, 56, I'll probably be closing the trade. Like I said, I'm already profitable now, so it's already in the money. At any point, I can pull the trigger and take profits. But I think this thing has more room to run over the coming months or so. So I'll be in this trade for a minute. So still has a bullish bias. Okay, next trade we'll take a look at. BILI. And this BILI one really got me excited this week when I saw it, especially when I looked at the options market. This BILI, I've been actually tracking BILI, believe it or not, because something got caught my eye late last year. So I've been trading this one in one of my simulated accounts just to see, because it's very volatile. I wanted to see how it moved. And this thing has been on fire, and I just pulled the trigger actually today and actually got into it. So I'm going to win, fight through that volatility. And I got a good price on the contract that I actually picked up. So let's take a look at BILI here. All right. BILI has earnings coming up. This is what I like about BILI as far as the stock is concerned, as far as the charts is concerned. If you look at the weekly, it looks like it hit a low back here of 909 back in August of last year, and it started trading above its moving averages, the major moving average, and had not failed the major moving averages yet. Got a bounce off of them back here in December of this year, and we traded up since then. Got an earnings date coming up. I think we're very, very close to hitting that 2270 mark, which I think BILI has the ability to do so prior to this expiration that I have. That's how the weekly chart looks like. If you look at the daily chart looks like momentum is fading out, but I think earnings could give it a push. So I'm willing to take a chance with this one and see what happens. I'm in this trade for, it doesn't expire until April, so I got time in this. But what really made me excited when I looked at the options market, it's like not a negative seed in there. And matter of fact, let's look at BILI over here, because this is another way you can check and see what the overall sentiment is in Thinkorswim. If you go to Thinkorswim, go under the trade tab, put in your ticker there, and you come down here to where it says option time and sales. Click on that, and this is what you'll see. You'll see all the activity that's been transpiring over the last day or so. And if you look here, you can see there is a lot of blue here. Okay, and if you click on this quantity here, you can put the highest one at the top. A lot of call activity, you notice, a lot of call activity. If you take a look at it over here, and yep, it's very nice. Take a look at it over here, barchart.com. This is what really, really caught my eye. I said, I gotta stop playing around and get in this position. If I would have got into it when I first started looking at it last year, I'd be up big time. But I didn't, so I got into it now. So it's better late than never. All right, we'll look at April, and then we'll look at the next one up. Look at this put call ratio, 0.17. That's a huge bullish bias right before earnings. Sorry, right after earnings. That was April. Let's see what March looks like. And March is really what caught my eye. This is when it caught my eye. 0.06. There's a lot of bulls that are expecting this thing to jump. And I mean a lot of bullishness in this particular one, which is what made me jump into it this week. I may even buy more contracts Monday or Tuesday. I'll probably buy more contracts in this one just to take that chance. This is a huge bullish buy, so I couldn't let this one slip by and not be in it, and then it pops. And so, and that's a good thing with these option spreads. You limit what you risk, so you don't want to risk more than what you're willing to to risk on a trade. So this one has a huge bullish buy sentiment. And if you look at July, haven't even gone out that far, but this looks like they're expecting a move to happen soon. So that is BILI. All right, next one, FXI, which is a China ETF. Something caught my eye on this one too as well, and I want to say it was something that I saw in the options market as well. Let's take a look at the charts first. FXI. You say, so down on the put call ratio, you look at the at both or just the left side? I look at the left side. Let me show you that again. I look at the left side because I want to see, what is the overall put call ratio, call activity versus put activity. So I like to look at the left side because the left side on barchart.com is pretty much spells it out for you. Put call volume on the last trading day here was 272 puts being moved, put contracts being moved versus 4,940 call contracts being moved. So that gives it a put call ratio. They even break it down to you, let you know what the ratio is right here, 0.06. So I look at the left side. All right, let's continue. Where was I? FXI. So this is our daily chart of excess FXI. I'm sorry, I didn't click. FXI. And one thing I like about FXI is it is already broken back above its major moving averages on a daily. So you see nice break above the major moving averages. It bounced around for a while, then it really starting to lift off of the major moving averages on a daily chart, which is a good thing. And if we take a look at the weekly chart, you'll see I love this TTM squeeze. TTM squeeze, when you see these red dots here forming, normally there's some type of change that's about to happen. So it was in a squeeze for a while. It acts similar to the Bollinger Bands. It's so I call it like a Bollinger Band squeeze, but it's a TTM squeeze. When you come out of that squeeze, see if we're going to break up or break down. Like we finally broke up. We're above the major moving averages on the weekly, which is a very, very good sign for FXI. Now let's take a look at the options market for FXI. While we're here, take a look at it over here. I think of swim, options, times, and sales. So this one is almost split. Well, split between the August contracts. But if you look at the March contracts and April contracts, it's a huge bullish bias. But there's a lot of trading going on FXI all the way out to August. Bulls and bears are trading this, so they're expecting some moves in FXI. Let's take a look at it in barchart.com. And again, I'm gonna concentrate on March and April because this will probably be a short term, a couple month trade for me in the near term. So as for March, the FXI, we see 0.16, and this really caught my eye too as well. 22,288 put call volume versus 142,535 call contracts being moved. 0.16, so that's a huge bullish bias on FXI for March. And let's see where April looks like as well. And I'm looking at the monthlies on here. And for April, drum roll please, 0.46. So expect there's a lot of bulls that's moving within FXI. So we'll see how that trade pans out. Next one, FCX. FCX. I didn't even And you can actually go back if I'm going a little bit fast. You guys haven't had to see the actual trade that I built. You can go back and review this video at a later date. But FXI, you can see I entered a 43.45 call debit spread expiring in April. And more than likely, when I reach these target goals, this is what I've been doing over the past couple of months. When I reach these target goals, so I still have a bullish bias, I'll just roll the trade out. I either roll it up and out, which means I'll roll it up from, I got a 43.45 call debit spread. I might change it to a 44.47 and roll it out another month or so. So that's what I mean by I say roll it up and roll it out. Same thing with FCX. FCX trading into the 13.15 call debit spread expiring in May. So I got plenty of time for this one. And like I said, if I hit those target goals ahead of time and I reach my profit goal, I'll roll up and roll out. So let's take a look at the chart for FCX. And while we're on the trade tab, let's take a look at the options market and take a swim. Same thing here. A lot of bullish activity in FCX. A lot of bullish activity. Your longer term traders. And this is what I like about FCX. FCX, you guys, it moves with copper. Okay, that's one that normally moves with copper. I'm gonna let you look at the copper the copper futures chart, and this is what I saw the copper futures chart before we look at FCX. This is the weekly. Just got a big bullish move this week. Broke above the major moving averages on the weekly. This thing has room to run, so that gave FCX a big boost as well. I bought several of these contracts over the past week. So in FCX, it's a little behind copper, but it'll catch up to it eventually. Got a TTM squeeze starting to form on the weekly. I'm looking for a big move here over the next 2 months or so. So I'll be in this trade for a while, and I'll roll up and roll out. If I hit 15 hours, I'm gonna roll up and I'm gonna roll out. Just get back in the trade. I think this one has legs to run. Let's look at the monthly while we're even here, because it's been in a downtrend for a while, and I think it's ready to make a move to go higher. Monthly, you can see, looks like back in 2016, there was a base put in at 352. We have not reached that 352 level again since on a monthly. It's been trading higher, very, very settled, but it has been settled and slowly. And we have not reached that 352, which tells me we're not going back to that level anytime soon, more than likely. And this thing is really, I think it's ready to take off over the next 2 years. So let's see how that pans out. That's the monthly chart. Let's go back to the weekly. All right, now let's take a look at the options market in bar chart, my favorite tool, FCX. Again, Freeport-McMoran. I'm gonna look at this a couple months because I've seen a lot of activity in this Freeport over the coming month, throughout this year completely, throughout this year all the way. It's a lot of action in Freeport. So there's a lot of bullish activity going on here. Here we go again. This is almost a 50-50. I'm still bullish on it. We might see some pullback here in the near future, but overall it's still below 0.7, which is still bullish bias. That's for March. Take a look at April monthlies. And it's even more bullish. So on a longer term, they're expecting this thing to really break out. April contracts, 0.10. That's a huge bullish bias going on there. And let's push it out even. Let's look at the May. I think I have May and April contracts, I believe, right now. So this is May, bullish buyers. I think these next 6 months are going to be very, very good for Freeport. This bullish biasness keeps up. One more. Let's look at August. Bullish bias, still bullish bias. So there's a lot of traders, a lot of institutions that are expecting copper to pop this year. All right, next one. Yeah, I did a lot of revamping my portfolio this week to try to take advantage of some moves that I can probably sit in for a while and not have to keep exiting these trades. All right. Siri, let's take a look at Siri. These are just some small positions I got now. Siri. This is a weekly chart of Siri. And it's like it's in a squeeze, right between the 50 and the 100-day EMA. So I think the next move is above the 100-day on the weekly. So we'll see how that pans out. Daily. It's like it's starting to move. It's starting to move. So I just want to see a move above these major moving averages. So it's starting to move. It's moving in the right direction. Let's take a look at the options market and see what they are saying. All right, options market here. So you got a lot of bullish activity as well. You got some put activity as well. Let's take a look at bar chart. That's our RI. And let's look at March 1st. .58, which is still bullish bias. Let's take a look at April, and we'll go further out as well. April, this is why I'll probably be out of this position for April. April is showing a bearish bias in April, so this may be a quick trade for me. But I think I have. Let's see. So mine's don't expire to June. Let's look at June contracts. And I check these on a regular basis because sometimes it does change. So June, it has a bullish bias for June. So I may just ride this one out. It's a small position. I may ride this one out all the way out into June. Let's take a look at May. Look at May. Not much action in May, but it is a bullish buy. So May and June is a bullish buy. So I'll probably ride this one all the way out and see how it plays out. Next one, GOOS. Just got in this one. GOOS reported earnings not too long ago, and it had a big pullback, a big drop. And a lot of times when you see action like that on a pretty good company, it always finds a way to recover. Normally it does find a way to recover. All right, let's take a look at the chart. The GOOS is going to be a very short term trade for me. I think I bought weeklies on this one. This is the current daily chart. Upward momentum seems to be dying, but I think we can get a pop here eventually, according to the options market. So that's why I bought the weeklies on this one. So this one I entered a 55. I entered two of them. I entered one that's a 52, 50, 55, 50 call debit spread expiring in April 5th, and then I got the same month, same week, a 55/5650 call debit spread also expiring the same time frame. And one's already $25 in the money. I think that's my 5250. Says 50. So that was already in the money. So it's moving the way I want it to move. And then let's take a look at this options market. For options market for GOOS, I'm gonna look a very short term on these. So let's take a look at March 1st. March 15th, 0.23. That's what I like to see. 0.23 on GOOS. So that's a huge buy sentiment, a huge bullish sentiment. Huge bullish bias on GOOS from now to March. And what about from now to April? From now to April, which is all I'm willing to look. Oh, another one. Huge bias, bullish bias on GOOS. All right, Next one we'll look at. Okay, so that's GOOS, that's Siri. Now I think I have my bearish trades that we'll take a look at. Okay, and for these we have the Qs, XRT, IWM. I'm still bearish on those, even though they had those moves this week. I'm still in these positions. I'll be holding them for a while. The Qs, I bought the 170. I'm in the 172, 167 put debit spread expiring in April. Entered this one on February the 21st, 2019, and my break-even price on this one is 170. First target goal is 168. So bought the 172, sold the 167s. XRT, it's another bearish trade, 47, 44, put debit spread expiring March 15th. This one is already profitable already, so this one's already in the money, but I still think there's more downside, so I'll be letting that run. Break even on this one's 45.60. And IWM 157, 155, put debit spread. Let's take a look at each one of these. First of all, I'm going to go to the options chain on the Qs. After we look at the chart, look at the chart first on the Qs. This, like I said, I showed you guys already my feelings on the overall market. I think this market is just too propped up. It has to have some type of give back sooner or later. So I'm feeling more comfortable on my three bearish trades. Let's take a look at the options market. Let's take a look at the action today in the Qs. Wow, all this bullish activity was going on today. I think the bears were like hiding underneath. Look at that. Look at that. Look at that pretty bearish sentiment. All the bears jumped in here today, looks like. All the puts started rolling in the day on the Qs. So we'll see if we're right coming next week. Now let's take a look at the Qs over here in bar chart. Let's see if March and April has the same bearish sentiment. Let's take a look at the March monthly contracts. And voila, when you know it, 2.28. That is a huge bearish sentiment on the Qs. So I think the bull's about to get squashed. If this sentiment stays true, the bull's about to get squashed. All right, let's take a look at April for the Qs, April 18th. 5.86. Woo! The bears are really trying to take advantage of these Qs. So it's a huge bearish sentiment over the next 2 months for the Qs. Next one, XRT. I know. I'm telling you, if this market break down, these ETFs and sectors are going to get crushed. All right, so while we're on this page, let's look at XRT here, and then we'll switch over to Thinkorswim. XRT here. Start with April. Let's look at April. Go down here. Let's see what the April actually XRT has a bullish sentiment in April. But let's look at March. Let's take a look at March and see what March is saying. Hey, get out. He said get out. Woo! And this is why I really jumped into this one when I did. Because I'm already up 68.25. That's the biggest bearish sentiment I've ever seen. I mean, that's a huge bear. I mean, you can't get no more bearish than that. 68.25. That is huge. Put volume 26,070 versus 382. I'll be out of this trade in the next 2 weeks, trust me, with a huge pocket full of money. Like I said, I'm already up big today. I think there's another drop coming over the next 2 weeks. So I mean, that's a big ouch for the bulls if they're going to be within it, be in this XRT. And then the retail sector has a lot of earnings coming up next week, and a lot of analysts are already saying that I believe retail, some of these retail names are going to get crushed. So we'll see how that pans out. And looking at the at the options market is believing the same thing. And that's a huge bearish bias. So I haven't seen one like that ever, that big. That is humongous. All right. Last but not least, IWM, which is the Russell 2000 ETF. And while we're here, let's see. So I think these next 2 weeks could be really, really bad for the bulls, because I think the market needs a breather, and I think the breather is coming. So if these options market has it right, then there's going to be a breather coming soon. And 3.37. That's another bearish bias, not as bad as XRT, but 3.37 is still a bearish bias. So we could be seeing some pullback coming soon, and the Russell as well. Let's take a look at the April contracts and see how April contracts look in the IWM. Still a bearish bias, so this thing could trickle lower. So we'll see how that pans out. Let's take a look at the chart as well. IWM. Let's see if the bears has been buying this up to today. Same thing here. The bears have been, look at all these put contracts, puts all day today. They've been jumping into this particular position of IWM. So next 2 weeks, I think, could be a little bit different from what we've been seeing over the past 8-9 weeks. Let's look at the chart of IWM, and then this would be it for this video. Hopefully those who did not get a chance to see my last video are able to see this one, are able to see how the options market is related to this overall market. Our options market tells you a big story, and a lot of people ignore that, but you got to pay attention to what the option market says, because a lot of institutions use options, to cover that, to protect some of their positions. So when you see that, some activity is going on. It's not just regular traders, but it's a lot of institutions that trade this options market. That's why I pay close attention to it. All right, so this is the this thing has been on a tear. It's been on a run, this IWM. But like I said, I think it's overextended. It's been running since, for almost 8-9 weeks straight. It has to have a breather soon. So, all right, that is my weekly market review and a portfolio update. Hopefully you guys saw something in my portfolio that you can put to use. So I will be reviewing these and updating these throughout the week, and I will be doing my new video the following weekend. So with that said, I'm going to be stopping this recording. And for those of you guys who are going to catch it on the replay, you can always catch it. And for all members, go to our website. I think it's on the next level training, somewhere on the training side, and you go all the way down to the options, long-term options drop down, and you can find the video there, or you can find it on our YouTube channel. But I'm going to post this link within the swing trade room very soon, and I'll also post it here for people who pop in the day trade room as well. All right, folks, I am going to stop this recording. And for you're very welcome. You're very welcome. You're very welcome. So I'll be stopping this here, and so somebody was able to catch it live today. Awesome. All right. See you guys on the next video. Tim Davis from the Bullish Bears team signing off.